Well, hello and welcome back, everyone, to another one-on-one with Jerry Hall. Today's conversation is with Mr. Alex Mashinsky, the founder of Celcius Networks. Now, in full disclosure, I am a Celcian and I use that platform to hold several assets that I can earn yield on. I have everything currently compounding on that platform. I'm not sweeping anything into cash flows yet, but this conversation goes beyond the normal, quote unquote, sales pitch or value proposition of Celcius. We get an opportunity to talk about financial literacy. We get an opportunity to compare and contrast this paradigm shift that's happening in digital assets with the existing monetary fiscal models of, well, we'll just call them the past. It was a really engaging conversation. I hope that you enjoy it as much as I had being a part of it. So without any further ado, let's get to that conversation. It's coming at you right now. So Alex, thank you so much for taking the time to join me today. How are you?
Great. Thanks, Jerry. And thank you for being a Celcian.
Oh, it's a joy, believe me. One of the things that I've always found really interesting is that most of the folks that I talk to do not have a formal education as it pertains to economics, or even they did not derive their financial literacy from a quote unquote traditional academic avenue. So I'm curious for you, your formal education. I've seen many of your interviews and I don't recall ever hearing your formal education.
So I'm a high school dropout, a college dropout. I do not carry any official degrees. I've failed miserably. I have ADD, so I failed miserably to get any official degrees or certifications.
Well, that leads me into the next question. So, and you and I are similar in that way. I was not a good student as a young man. Back then, they did not understand what dyslexia was. It wasn't something that was understood. Later, come to find out that was the issue that I was having. And one of the reasons it was very difficult for me to learn in that particular milieu. But what I find interesting is folks like you and me, when we discover how we can learn, it's off to, once we understand that process, it's off to the races. So one of the things I wanted to ask you is, where would you say that you got your financial literacy from? How did you learn about money and economics? Because everything you've done, all these success stories in your life with these companies you've built, they need you. If you don't understand certain things, you will never be successful. So obviously you learn them. I'm curious where and how.
Yeah, so I definitely was not focused on the financial side of it. So all of my Celcius is my 8th startup as a founder, and most of my focus has always been on here is a technological innovation or opportunity. Let's just build it, and if enough people use it, the financials or the dollars will take care of themselves. And what happened in the first few companies that I had is that somebody more astute than me in finance realized, oh, look, this company is undervalued. Let me control the company. Even if I only invest 20 or 30% of the company, I can control it by controlling the board, and I'll extract all of the value one way or another. So I learned the hard way about how the world works. Like my first 7 companies were all venture backed, and the VCs are very good at doing what's in their best interest rather than what's in the entrepreneur best interest or the customer's best interest. So with Celcius, I really focused on making sure that that doesn't happen, and we structure the company in a way that guarantees that we will continue to provide this value to our customers without anyone being able to come and change the charter of the company.
Well, I think that this was not a written down question, but I'm going to just riff off of that statement that you just made. It appears to me that the way Celcius is designed, that you, the founder and I would say a majority stakeholder, all your incentives are exactly in line with the same incentives I have as a user. I find that unique in the world of building a corporation that provides a product or a service to a marketplace. What was the determining factor that led you to say, okay, listen, this is the way this is going to be?
Well, again, I didn't do Celcius because I wanted to make even more money, right? I mean, Celcius is my third unicorn, so I had amazing success in the past, and I tried retirement, and I was antsy. I wasn't happy. My wife just looked at me one day and said, "Go find something to do," because I was just driving her crazy. And so here the challenge was that I wanted to make sure that this amazing new set of rails called the blockchain, and Bitcoin is just one of the products running on it, right, is not gonna fall into this trap where we take the worst of Wall Street and we bring it into the blockchain and we copy all of the things that we did over the last 200 years on Wall Street that are not in the best interest of the people, right? So Wall Street is exceptional at figuring out how the 1% controls the 99%, right? And here we have an opportunity to reset all of that. And so I wanted to make sure that we built an organization that always acted in the best interest of the customer. And I kind of modeled it on Costco and Amazon and a few other companies that definitely you can say with a straight face that, okay, yes, they're giving their customers everything they can, you know? So those were really the drivers. And yes, there's a lot of technical stuff and a lot of whatever, but you know, I personally have over $300 million in coins with Celcius. So I don't even have to train my brain. Like my brain automatically thinks exactly the same way you do, right? Okay, what am I going to get on Monday? How can I get the loans better? What other services do I want as a user of the service? And unfortunately, when you're a CEO, when you're a founder, and you're thinking as a shareholder, you're not thinking what's in the best interest of your customers, because you're trying to, again, do what's in your best interest, and those two in most cases are conflicting with each other.
Well, it's an interesting paradigm shift, right? When I think back and I think of all the companies that have done very well being built off of the back of a permissionless open source network, you and I would call it the internet, companies like Facebook and Twitter, and I mean, there's countless of them that have come in and created networks for themselves and opened the door to advertising dollars, right? So it's like the users of the network get very insignificant value add. I mean, sure, there's a nice little endorphin rush when somebody likes or retweets something I've done or shares something on Facebook that I've done. That's wonderful. And I totally get that whole, you know, the behavioral economic model of network growth. But it's always been the capital structure part of it where all the money was. So it, you know, as a Facebook user, I get a little bit of value, but if I'm a Facebook stockholder from day one, I've received all the value. And this paradigm shift that I see with specifically Celcius is one of the companies I can name immediately that is in this new paradigm shift of, you know what, we're going to bring an economic incentive to the network user. And that's the entire focus relative to the old model of it's the capital structure that gets all the financial rewards, and the network gets an insignificant emotional or spiritual reward. I don't know how to term that.
No, I totally agree with you. I will just say it in other words. The Web 1.0 was all about I'm your counterparty, and you buy from me, and I get all of the rewards for selling you stuff or giving you stuff or processing your transaction, right? Web 2.0 was about marketplaces and was about, okay, We are neutral. We sit in the middle. We introduce you to the rest of the community, or we connect buyers and sellers together, but we get to keep the vast majority of the economic value being created, right? So, and Web 3.0, which is what we're focused on right now, the blockchain, the Bitcoin-based infrastructure that everybody's building right now, is where, like you said, we are not a counterparty and we're not neutral. You would say, wait a second, isn't neutral the best? How can there be something better than neutral, right? Well, acting in your best interest is even better. Representing a cohort, representing a community of people and making them all stronger because there's a million of us now acting as one is even better than being neutral, right? So what Celcius has done is basically said, you know, like I created the service for myself and then a million people showed up and said, hey, I'll sit on the bus next to you and earn 8.8% on stable coins. I'll give my Bitcoin and earn 6.2% on my Bitcoin. So all we've done is we pulled together a million people, 115,000 Bitcoins, 1.5 million Ethereum, and so on and so on. And with that giant pool, we can extract more value out of the borrowers, out of the institutions, the exchanges, all the people that used to pay us nothing for parking our coins with them, right? So the benefit here, again, just like Costco, what is Costco? Costco organizes for you the warehouse and selects all the products, and you get to walk in with your cart and you get everything at cost, right? So the model is very similar because you know that they've done everything to curate the best products in that warehouse. You don't need to, when you go in, you don't check the price of the oranges. Let me check the price here versus my store or versus some, you know that you're not going to beat that price no matter what, how much research you're going to do. So that's what Celcius tried to do. Instead of just a warehouse full of products, we put financial products there, right? And unfortunately, we live in a world, like you said, most people don't know how finances work. They don't understand that money is supposed to make money, that yield is something that everybody on Wall Street makes. It's just something that they don't share with us. Like, it's funny because, you know, like just I think it was 3 weeks ago, all the banks bragged to Wall Street, went out and told everybody how amazing their quarters were. JP Morgan, $18 billion in net profit in one quarter, right? Goldman Sachs, every one of them, record all-time profit. And yet they're all paying the lowest interest in history to their customers. So how can there be such a disconnect? If they can make tens of billions of dollars for themselves, can't they afford to pay us higher yield on our deposits? So the answer is, of course they can. They just choose to give all that money to shareholders in the form of dividends or quarterly distributions. And we, the people, choose not to pull together and demand higher rates. And that's what Celcius has done. It pulled together $18 billion from almost 1 million people. And every day we're demanding higher rates from our counterparties.
No, it's brilliant. This, like I said, this paradigm shift of networks having disparate profiles, right? Users and capital structure. With what I see Celcius is doing, it's a marriage of both, right? The users are the capital structure and have a financial incentive to participate. It's brilliant. Here is one of the things, and you're the perfect guy to talk to. This 3-year journey that I've been on since I've been in digital assets has been a journey of me developing a financial literacy, an understanding of how economies work, how money works, how value is exchanged and transmitted, right? And so it's more than just me looking at, if I put this dollar in next year, will it be worth $1.25 and will it generate me 15 cents a year? I mean, that's not at all what interests me. Although it's an important part of being able to sustain myself, it's not what interests me. What interests me is here we are, we have an opportunity, all of us as early adopters, to be able to open the door to the next wave of adopters I think that will only be done through two things: one, financial incentive for them, and an increased financial literacy. So here's my question to you. Does Celcius have any plans to either finance, put out grants or something to expand a financial literacy program for the world? Because it's only through comparison and contrasting to what's existing can you really understand the benefits of what you're doing?
Yeah, so our mission is to unbank the banked and bank the unbanked, right? Which sounds like a little, wait a second, what did he just say? Yeah, so I think we're doing a very good job in unbanking the banked, and unbanking the banked mostly is helping rich people make more money, right? Unfortunately, again, most of our $18 billion are coming from well-off people in Europe and in the United States. That's about 80% of our users are in those two jurisdictions. And these are people that already have a lot of capital. And like you said, they want to earn yield. They want to preserve their capital, so they're investing in digital assets. But our second half of the equation, which is bank the unbanked, is all about taking the spoils of us doing good and doing well, and then enabling billions of people who don't have access to financial freedom or financial opportunity to be included in this revolution. Now, today, unfortunately, again, because of gas fees and blockchain transaction costs, it's very difficult to go to somebody in Africa or go somebody in Asia or South America and get them to put their $20 or $50 or $100 when the gas fees are $50, right? So we as an industry, we have to solve that and then open this revolution to everybody, right? Because any smartphone can basically, you can download an app and you can participate in everything that we're doing here, take a loan, earn yield, right? Increase your financial freedom by investing in these assets, protect yourself against the debasement of your currency in your local country, and so on. So that is coming, but we definitely, we failed on two things. One, women, we only have 15% women in crypto in general. I think at Celcius, it's a little bit higher. I think it's 17%, but still it's not 50-50. So right. we have to work on that. And the second one is we have to solve all of these costs so we can basically offer loans and access to capital and everything else to the people who need it the most, right? So we have a formula, we have a plan. We even know when this is available, because the minute ETH2 launches, Cardano launches, and so on, we'll be able to offer a lot of these services. So we're anxious and antsy to be able to offer it already. So I can tell you that is definitely at least half of the plan.
Well, it's one thing to have an incredible playground, right, to come to. It's a whole other thing to know that it even exists, or what value would it bring relative to what's going on in my current life. Hence my thing about the, financing or sponsoring or in-house putting together, information, educational information, So a year and a half ago, just a quick backstory on me, as I realized how much I did not know and what I was learning, how it was expanding my view and what I could feel myself doing and not doing, I started this channel. I started this channel along with a Facebook group, a Twitter, and an Instagram, all of the same name, Jerry V. Hall, boom. And the whole mission was, I was going to take everybody who wanted to follow along on a journey of my financial literacy, right? And what I realized very quickly is using open source material, right, or free social networking platforms, that an audience and community could be born, right? And through that community can real change be arrived. Well, I'm just one guy, right? Small little 6,000, 7,000 subscriber YouTube, 3,000, 4,000 people on Twitter, a couple thousand on Facebook, Instagram, what have you. Tiny little guy. But if some outfit actually put any money into it and created something that's purpose was about education, whether it's a one company like Celcius or an entire coalition of blockchain entities that want to educate the world, I think you would see a much faster adoption rate than the already existing lightning fast adoption rate that you're already seeing. Because I think people don't, what they don't know, they don't know. They don't understand. Most people live in a world where they trade their time for money and live paycheck to paycheck. That's the majority of the world, unfortunately. And it's because there is no financial literacy education in public schools, period. Doesn't matter what country you're in, doesn't matter.
Well, society will fall apart if everybody did what they wanted, right? So I think some of this is intentional, right? It's we basically, universities and colleges are like factories of lawyers and accountants and engineers and whatever society needs. And then we just insert these people into these sausage factories of productivity that we need to operate society. So part of it, I think, is intentional. I mean, I don't think that, the Treasury or the Fed wants everybody to know exactly how the sausage is made. I don't think anyone's going to like it, right? When you realize where money is created and how it's being distributed. Like a simple thing I ask people to do is to say, okay, we spent about, to date, I think we spent about $10 trillion between Corona and infrastructure bill and money printing and so on. How much of it did you get, right? You got a $1,200 bill, $1,200 check, great.
That's what I got.
There's 200 million eligible Americans, right? Do the math. Take 200 million times 1,200 and see where did 99% of the money go. It didn't come to you. It went to somebody else. So because the number 10 trillion is so large that most people they don't understand how many zeros are in a trillion. I don't understand what you're talking about. So I think all of us get a little bit. We get the leftovers, or we get a little bit of the crumbs, and we don't really understand how society works, how this sausage factory is made, how the 1% maintains their wealth, or really dominates the society, right? And the problem, the gap between the rich and the poor has never been greater. Not in the Roman Empire, not in any other time in history has so few controlled so much. And I'm part of it. I'm one of the, I'm in the Forbes 400, right? I'm one of the richest people, and I don't feel good about it. I don't, I was driving to my house in Hampton. I was crossing this graveyard in Queens, and I said to my kids, I don't think any tombstone in that graveyard says how much this person died with. Even the fancy ones that built themselves a coliseum, a whole building in that graveyard. So we're not on this earth to really accumulate as much wealth as possible, yet these are the heroes that we celebrate, right? We celebrate the people who are rich or successful. So for me, it's all about, okay, how can we give back? How do we include as many people as possible? And at Celcius, we didn't just do, okay, here, let's take most of the income or the value created and give it to the people. That's the yield that people are earning. But we also created a token which represents the value of the company, right? And we said,
look, i.e. the value of the community.
Right, and the value of the community. And we said, look, you can decide, each one of us can decide, do you want to earn in kind? Do you want Bitcoin on Bitcoin? Or do you want to earn in Cell token, right? And we added a third piece, which is the equity. We said, look, we have equity in the company, right? The founders got 100% of it. We're going to slowly sell pieces of it. Do you want to come and join us on the bus and participate in this value creation? Because what's happening for the best companies in the world, like you mentioned, the Googles, the Facebooks, the Coinbases, that none of their customers get to participate until they're public companies and they're worth 200 billion. Well, then it's too late. It's too late that's when you dump on the community. You sell to your community when the company is worth 200 billion. That is not value creation. That is not participation. That is not how you basically bring the village with you across the finish line. So at Celcius, we did the opposite of all those things, right? And I'm very proud that we are doing this again and again, and allowing our entire community to come and participate and learn from this, right? Learn how value is created, how value is built, but everyone can choose which seat on which bus they want to join. Excellent.
Well, I'll tell you what, I hope that you would in the future be willing. I put together a one-page proposal on a thing I call Crypto Espanol, and it's just basically a multi-social media platform educational vehicle to bring about education and understanding of money, the history of money, how value transmission works, and highlight some of the benefits that this blockchain era that we're issuing in has on many levels, right? So I hope that you'll be open to that in the future. But let's stick back to this question. So I've got a question. One of the things I find really interesting is that the blockchain space brings this mark-to-market asset, this asset that's priced every second, it's a different price. So in a credit industry, it's a relatively new phenomenon, right? Generally, if I'm buying a home, it's the appraisal price of the home at the time that I'm buying it that the loan is based off of, and they can extend out 30, 40 years. Well, when I have a portfolio of assets on my Fidelity brokerage account, they do that on a quarterly basis, right? They rebalance and take a look at my thing. In crypto, it's mark to market. I mean, geez, what the ratios can swing up and down. And one of the things I loved about Celcius is even in the dire days of, let's say, March 2020, when the whole world is getting liquidated, nobody on Celcius got liquidated. Nobody. So how do you foresee this market maturing? Do you see a day where people will be able to do basically 30-year loans off of a crypto portfolio and have a fixed rate on that?
So look, we intentionally stayed away from giving people huge leverage. I mean, all the guys that kind of did the 100-to-1 leverage or whatever all got in trouble with the regulators, right? So, and it's not good for our customers. I mean, so if I want to have a relationship with you for 20 years or 30 years, how does it help me if I liquidate you? Who benefits from it? I might charge you a fee once for the liquidation, but then I'm going to have to go and look for a new customer, right? So at Celcius, I mean, our goal is you created the asset. Our job is to earn yield on the asset. Can we make that a 30-year relationship? Can we create a relationship in which this win-win relationship lasts for as long as you trust us with your asset, right? So for us, while everybody else is focused on fees, right? You look at Coinbase, they charge you a fee for everything, right? A transaction fee, a credit card fee, withdrawal fee, you name it, right? Celcius, there's no fees, because if I'm focused on fees, I'm going to lose you as a customer. So instead, we rather focus on value creation and us participating with you in that value creation. And by the way, because we have a lot of customers, now our company creates value, we will allow you to participate in that value as well. So it's a very symbiotic relationship, which is a win-win. And what you really have to ask yourself is, how come no one else thought about it before? I can't believe
it's really, you bring up a good point, and it's so, to me, it doesn't, it's like, where's game theory in this, right? You seem to understand that it is far less expensive to retain a customer than to acquire one. Yes. Customer acquisition is a part of every business that's trying to grow, yet not a lot of time is spent on customer retention. And I see that in crypto with everybody, right? Does Coinbase have a wonderful customer service experience for its users? No. Well, but are they advertising? Do you see Coinbase advertisings on any website you go to? Do you see the little come to Coinbase? You know, I do. I see in the web advertising all the time. It just amazes me. It seems like you get it. You get that it is cheaper and more beneficial to retain a customer than to throw tons of money at acquiring one.
But that requires long-term thinking, right? So think about the average entrepreneur, right? They get rewarded by their venture capitalists and everybody else for short-term thinking, meaning you get your customer growth to be crazy. Let's go public as fast as possible. Let's dump the shares on somebody else. And then it's somebody else's problem to retain the customer. It's not the VC's problem. It's not the founder's problem. So look at what happened with the management team of Coinbase. What happened on the first day they started trading on NASDAQ? They all dumped their shares, right? So are they there to have a 30-year relationship with you, or are they there to cash out as fast as possible? So I love it how people were really criticizing ICOs and how ICOs are bad and how ICOs are whatever. Meanwhile, Coinbase, Robinhood, all these companies are doing exactly the same thing. So, and the SEC doesn't do anything about it, right? So I really, I understand why there's criticism, and I understand there's a lot of bad projects. But even out of the internet, the first internet wave, how many great companies did we get? 5? So anyone
that are here today, right.
Right. So anyone is expecting 1,000 great crypto companies doesn't understand how business works. There's going to be maybe 5 to 10 great crypto companies coming out of this revolution.
I agree. But there's also this different paradigm in that it's global. And for so many years, things were designated to a specific jurisdiction, right? It wasn't until the internet that, the global span of things really at least came into my awareness. Obviously, you've been in tech, deep in it for a lot longer, but prior to the internet, it was local. I mean, the international trading community was extremely small relative to what it is today. And now you bring these monetary networks into play and programmable money into play and have them sitting on a global stage. I have no idea what's going to be built or developed in the next 20 years. Just like 20 years ago, I would have never, ever thought I would get into a car with a stranger. But now I do it all the time when I press my Uber app, right?
Right.
I mean, so I don't know what the future holds. I just know that I can see the trend. And it all kind of goes to this one thing. It seems like the financial web, you call it money, the money web.
Money over IP, yes.
Money over IP is bringing back fiscal responsibility and the resources to be able to just save again. To just be able to save again.
Yeah,
I think that's really important because Alex, during our adulthood, I mean, you're a product of the 60s. You were born in the 60s. I was born in the 60s, 65. And I developed my worldview in the 80s when I started, I was a teenager, became a young man, became a full-blown adult. All of that happened in the 80s. And there was a very optimistic, expansionary view of the world. I did not know it was fueled by credit and the expansion of credit. I know that now. Well, that's not sustainable. We know that's not sustainable. You could not live in this, forever spending more than you make. Yeah,
but that's what we are, right? I mean,
that's where we are.
We as individuals, or we as a government, or we as a country are all borrowing from the future. When we print money, that is reaching into the future and grabbing our children's money and our grandchildren's money, because the debt, the IOUs that we're creating, somebody still has to repay them. Now we're living beyond our means, the United States of America, right? How do we know that? We have deficits every year. We owe $30 trillion to the rest of the world, the most indebted nation on the planet. Everybody thinks that America is the richest country, but it's a country that owes the most to everybody else. Now we are creating amazing companies. We are creating a lot of value. But let's not fool ourselves. We have more debts than everybody else. So when you live beyond your means, like you said, sooner or later you have to pay the piper, and normally that does not end well. And the 700 different examples of fiat currencies before the US dollars all ended up with almost zero value. They all devalued to zero. So I don't know why we think that we are different than the Roman Empire or the Byzantine Empire or any other reserve currency that existed, the British pound or the Dutch or the Portuguese or the Spanish or so on. So unfortunately, we are probably at the end of that cycle. And the main question is really, what is going to replace the dollar? Is it going to be a digital dollar that replaces it, where we get a new lease on life? Is it going to be the digital yuan? Is it going to be Bitcoin, right? Or something completely different, like a gold or something else? So I think we're going through that right now. And a lot of people, the reason Bitcoin is up 3 million% in 13 years is because a lot of people are scratching their head and saying, you know what? I don't know who's right and who's wrong, but I'm going to put 5 or 10% of my net worth in a non-dollar correlated assets. If something really bad happens, at least I'll have something, a safety net that I can rely on. So we're not, Celcius is not here to tell people, hey, sell your home, put everything in crypto, move to Costa Rica or wherever. I would love to move to Costa Rica, but what we're saying is really that each person has to decide for themselves how much are they believing in, because we pay yield on dollars, on stable coins. So you can come to Celcius and say, I don't believe in Bitcoin at all. I think Bitcoin is a scam, and still earn 8.8% on your dollars. And even though it runs on a blockchain, it doesn't matter. You can take your dollars, put them back in your bank, and at the end of the year, you're going to have almost $109 instead of $100. Try that with your bank account, or try that with the Federal Reserve and see what you're going to get. So we are not telling people what to do. We give them stable coins. We have 13 different stable coins. We give them tokenized gold. You're a big gold buff. Great. We're not telling you don't do gold. We're telling you, go ahead. Here, you'll make 5.5% on your tokenized gold. Yield, real yield on gold. Or you can choose any of the 30-something digital assets if you believe that Ethereum or Bitcoin or anything else is going to have a future, right? And that selection is what allows everybody to feel at home, even though they completely disagree on what the future of finance looks like.
I have a friend who does exactly that. He's an independent contractor, and he pays his taxes on a quarterly basis. So all this revenue comes in again, for the services that he provides, and he immediately, when he deposits them into his bank, he immediately goes and buys USDC on Coinbase, deposit it on Celcius. He's earning interest, and then every quarter, after he goes through with his tax guy and he figures out how much US dollars he has to give the tax man, he will go deduct that amount, send it right back to Coinbase, US dollars into his bank account, check out to the IRS, and he is compounding value in a mechanism that he already did, right? The money would just sit in his bank, and every 4 months he would reconcile his taxes. Well, now he's earning yield on that money while he waits. He hasn't changed his operating procedure at all. He hasn't learned how to spell Satoshi, and he doesn't care. He doesn't want to care.
Well, look, we all used to do that with our bank. I mean, right. 30 years ago, you could do that with Citibank. You could do that with Chase. They just, again, both the Fed and the banks have taken this away, like you said before, from an entire generation. People who are 20 or younger have never even heard of the idea that money can earn money in a bank account. I mean, they look at you like, what are you talking about? Like, of course I can't earn money. Money can't make money, so it's definitely something that looks magical, and you have to go through hoops to give yourself 8% yield,
Yet it's possible. And,
Yes.
and it really kind of demonstrates, number one, this whole paradigm of extracting value from your network. And that's all JP Morgan does. That's all Goldman Sachs does. That's all that any of them do, are extracting value from their network. And I think in the future, as people become more understanding and aware of what's going on, it will be the networks that provide an incentive for the people to participate in them. That is not only good for them as a network member, but good for the network from a sustainability and growth perspective.
Yes.
So you're in the right place at the right time yet again, right? You've kind of had a golden horseshoe up the tuchus for a lot of different things. Not that you aren't really intelligent and not that you haven't worked your ass off, because I know that you have, but there's a level of being in the right place at the right time and doing the right things that have culminated in you becoming you.
Well, look, I think one of the first thing I worked on was voice over IP, which is what part of that globalization that you talked about. And back in the 80s or 90s, if you told people, look, everybody in the world is going to be able to talk to anyone, no matter where they are, and it's going to be for free, they thought that you need to be hospitalized, and they were welcome to call the ambulance to take you to that asylum to put you there, because you paid, I don't know, 30 cents a minute for domestic calls. You paid $3 a minute for international calls. Video was unheard of. That was something that AT&T showed in the World Fair, and we all thought it's going to come in 2050, and here we are. You're in Costa Rica, I'm in New York City. It's a free call, right? So voice over IP, video over IP, and it propagated so quickly that most phone companies had to find a new business. They overnight basically became, almost went out of business.
Antiquated.
Exactly. And the same thing is happening right now with banks, so money over IP is exactly the same phenomena, right? We've learned that our local bank has some special powers that only it is allowed to take money from us. And it's an intermediary, a toll collector that has a license to charge us fees, right? A bank fee and a withdrawal fee, an inactivity fee, a credit card fee, you name it, right? Interest fee and so on. So this whole idea that you can manage your own money, or you can earn money on your money without a bank, without an intermediary, without a toll collector, and that what you're earning is much more than what you're paying, is definitely something revolutionary that most people, even today, most people still think it's too good to be true, right? So our biggest challenge has been convincing people that this is a profitable, sustainable business model where everybody wins, because they're all still looking for, okay, but where is the hidden agenda? There's got to be something here that you're not telling us, and we just can't figure out what it is. It looks good, it works, we've been using it for several years, but they're waiting for the other shoe to drop, as if. And look, I'm as transparent as I can be in what the model is. The opposite. I mean, we have 100 people trying to copy us now, and some of them are pretty successful as well, right? So obviously, if there was anything wrong with this, they would have figured it out already.
Well, again, it just boils down to experience, right? So my life on this planet, I've learned very quickly, if I'm being given something for free, I'm the product. There's something they want from me, right? And they're going to get it most likely. Well, when you talk about, the banks, and you talk about even internet companies, these monsters that have all this value, they've extracted it from networks. Well, if you have a network that gives its network users value in the form of money, I think it doesn't need a lot of explanation. However,
it needs a lot of trust.
It needs a lot of education, because if you don't understand the old system and the mechanics, how can you evaluate the value proposition of the new system based off of just, if you join us, you can earn money? Well, we've been conditioned through crap for so long that marketing is not reality. Well, I think in this case, marketing is reality. So now you've got to kind of, I would stop. In other words, here's my best suggestion: stop marketing and start educating. No, really,
Right.
I'm
No,
serious.
I hear you.
Stop marketing and start educating, because you already understand once you've acquired a customer, it's a lot cheaper to keep them than continuing to throw money at customer acquisition. You're a bright guy. I bet you're the first company in this whole space, because nobody else is doing it, to launch an educational program that's just about education.
So we do some of it already. We only do it in English though. So we have our own YouTube channel. We have hundreds of ambassadors. I think now it's over 2,000 ambassadors that create content in different languages, and they kind of specialize in different areas of credit or yield or income or whatever. So I agree with you 100% that giving people basic education about what is money, how it's being used, what can you control versus what you cannot control. So all those things are things that unfortunately you do not learn, neither in high school or college, or
just not part of the curriculum.
right. And even you could be 70 years old and still not know anything about money. And unfortunately, again, like you said, we spend a third of our lives or more just exchanging our time for money. And then we take that a third of our life in dollar terms, and we just throw it on anyone that crosses by. And many times we get hurt, right? We lose money, we don't manage it properly, we invest it wrong, and so on. So you would think people would spend more time educating themselves. And part of what we do at Celcius is, even though we don't give financial advice, we try to share best practices. We try to explain to people, because there are universal rules that apply to everybody, right? And many times people need to hear it from someone they trust, right? So it's not just like, even on the internet, you never know what's true and what's not true. So we're definitely becoming more and more, and I think you are the same way, a source of this reliable education where you can kind of learn new skills or hone skills you already have to get yourself to financial freedom and financial independence.
Absolutely. Well, I hope to be able to help partner with you the opening and expansion of your Latin American audience, just as I hope there's somebody who's an avid Celcius like myself who might be in Africa or one of the Asian nations, because this is an idea whose time has come. We just need to educate the folks. It's like the field of dreams. Alex, you've built it. Now we will come. And here it is. So, I'm so grateful you took the time to chat with me today. I'm looking at the clock, and I want to make sure, if you have a closing thought, that there's room for that. So, Alex, any closing thoughts?
Sure. So, again, our mission is unbanking the bank, bank the unbanked. Our system is, you do good first and then you do well. And that served me, like you said, my entire life. I always focused on doing good, Voice of IP and all the other projects I worked on. And I think, again, look, 90% of humanity is good. 90% of humanity is willing to help each other, is willing to collaborate, is willing to, again, build a community. And unfortunately, most of them do not get the opportunity. Part of what we're trying to do here is create this community that you talked about and expand the community. And in the global village, everyone can join this. This is not some exclusive club that is only available to the people who went to Harvard and speak perfect English. Anyone can join, anyone can benefit. And that's part of why we're here. And again, my commitment is to do this for as long as I can and make sure that this company survives me and continues to do good and do well for a community of hundreds of millions of users that can really build and entrust their financial freedom over several generations.
Well said. Well said. So folks, on behalf of Alex and myself, till next time, Pura Vida.